Good afternoon. This is Mr. Not Advice. As always, this is for education and entertainment purposes only. Today is Monday, August 24th, 2026, my end of the day wrap up. Okay, so first, Bessent's press conference today, which is actually held an hour early than what was announced, turned out to be a yawner in terms of immediate market reaction. They're targeting any country or business that is helping to facilitate any type of trade with Iran, focusing on gold. They're focusing on oil, obviously shipping. They're focusing on shadow markets. So I think that involves banks and brokerage firms. But he did not lay out a direct timeline, nor did he name any specific country. The talking heads had a comment that it was primarily directed at China because China continues to be an importer of Iranian oil. On top of that, we had oil prices as well as bond yields uh, pushed lower today. And that was helped by reports over the weekend that Hormuz traffic was up 400%. And my understanding is that Hormuz traffic now is sitting at about a 50% of what was the normal traffic. I've seen reports today that oil analysts out of Europe are bearish on oil, but at the same time bullish on refined products, something that we've been talking about. Precious metals and crypto rallied today, but that was despite the stronger dollar as tech weakness continues to weigh on U.S. Indexes. The overnight, we had weakness in the KOSPI, the South Korean stock market, with Samsung's largest ever shareholder return plan fell short of market expectations. So that started the week to the downside for U.S. tech stocks, which weighed on all the U.S. majors, except the Dow, which managed gains thanks to primarily financials. NASDAQ was the biggest loser as investors remained focused on positioning ahead of key event risks, including NVIDIA earnings, Jackson Hole, and then, of course, fresh any U.S. policy headlines. Staples and financials outperformed today, while tech and energy stocks were the biggest laggards, down over 1% today. The AI trade continues to struggle as we see token costs catching down or dragging down the artificial intelligence stocks. And that's also contributed to I believe, the seventh day in a row for NVIDIA's weakness. At the same time today, NVIDIA, it was announced or leaked that they're going to be increasing memory prices, depending on the configuration, by as much as 15%. All the major AI leadership baskets were lower today. The orange line here is the S&P 500 excluding AI, and today's worst horse in the glue factory was US optical networking. As I said, Nvidia is down 7 straight days today, which is the longest losing streak since September of 2022. That's ahead of Wednesday's earnings. Part of that has to do with its credit default swaps pushing to record highs. Momentum basket, Goldman's momentum basket continues to collapse as semiconductors continue to slide also. The market right now is very quiet, low volumes, low activity. I think what we're seeing the end of the summer doldrums. I had a member ask me, "Have you ever seen a market like this before?" I've seen a market like this, but I haven't experienced a market like this that has followed the market that we've had for the previous 5 months. That's what's been especially frustrating and interesting to me, has been this nonstop drumbeat of different large forces, macro and geopolitical, that have been pushing and pulling the market around. This is so much of what is going on today is being driven by geopolitical events. Even if you look at interest rates, countries wouldn't be perhaps demanding as much debt issuance if there wasn't two multi-front wars going on, one in the Middle East and one in Ukraine. And so I think that the worsening fiscal picture in the U.S., as I said, that $40 trillion number means absolutely nothing in terms of our deficit. I've made the case that on a per GDP basis, we're not at record debt levels, at least from interest payments. And I think that it's the combination at the same time that is causing the market to really struggle here. I mean, you've got a market that's been trading in this channel effectively since about May 6th. That's extraordinary. The Qs have been trading there. The SPX also since about May 6th, May 4th. While we are able to break out of this channel, what we haven't been able to do is once a new high is made, we haven't been able to meaningfully accelerate away from it. That is something that is indicative of me of, or it's proof that there is one sector that continues to drive the market, and that's the AI, that's AI and memory and all things associated with it. Looking at Nvidia today, as I said, this is the seventh straight day of Nvidia selling. Today was a little bit heavier selling than normal, or recently, with it down $6 to minus 291. If we look at Intel, we're seeing the same thing, although it's not down as much. And while it hasn't been 7 straight days, it's 6 out of the last 7 have been red for Intel. Micron's held up much better, but it's struggling around this 50-day moving average. As for our favorite stocks, EOSE, first of all, traded 27 million shares. Starting to believe that's going to be our new average, is around 27 million. But my plan is, or my belief is, until we get any news out of the company in terms of an operational update, we are going to trade within this channel from about 311 all the way up here to call it 470-ish. There's a 450-ish would be the tighter channel. Until and unless we get an update, this stock is going to bounce around. It's also going to continue to track very closely the Russell, okay, which we can see just in the last couple of days activity. The correlation's been especially strong. If we can get a drop in interest rates that's meaningful, this is the 10-year rate, okay? If we can get a meaningful drop in the 10-year, then I think that we'll start seeing, and the 20 and the 30, then we'll start seeing most likely Russell, these small cap stocks start to rally again. They were rallying before this interest rate issue came up. PCT today did break through my short level at 657-ish, but it was able to recover to 661. I need to close below that, and then I will short that, with my target being almost $1 lower at 573. Other than that, even trying to get into any of these trades, such as gold right now, I have a gold buy at 47.83. Why? Because that's a previous area of price discovery there where it failed. With silver, my buy level is 71.67. That's only really $2.30 higher than where it is today. I don't like buying things when it's at an angle like this. I like to buy things on a breakout. I don't like the chase. And so if I see candles where I don't see at least 2 candles of consolidation, then I won't enter the trade. I'm looking at some other trades, IGV, which is the software as a service. This has been a very supportive level. If we get down below this, we have a gap to fill. And this could come all the way down to the 50 and the 200-day moving average. Additionally, looking at Bug, which is the software security ETF. If we get a break of the 50-day moving average, I would look to short it. But at the same time, I'm looking for a reversal off of this hammer candle because it's been riding the -1 SD. Bitcoin today was another strong day in Bitcoin. But again, what do we have? We've got Bitcoin moving up, and now we're starting to see the rate of acceleration roll over. So unless we get another big update in the next 24 hours, I would suspect we're going to start to see this come back down temporarily. Same thing from Ethereum. We're seeing the rate of acceleration, the size of the candles. Neither Bitcoin nor Ethereum were able to close at the top end of their range today. I think that what we're probably going to see is a rollover and consolidation, not a rollover where it drops completely, by the way. So other than that, don't have a tremendous amount. I did close a wheat trade today, closed it for, I believe, -22%. Also closed my Carnival Cruise Line. I have a 3-day stock rule. If I don't make money on a trade within 3 days, I get out of the trade. Also closed my CCL trade for minus 15% today. That was near the open. Other than that, I don't have any new trades. I'm looking at 2 trades tomorrow, and I'll put those out if I can actually get into them. So I hope you have a good day. I know that this type of market can be very frustrating. I've not seen this sequence of different markets, I guess, environments like they've linked up since the beginning of the year. But with all things, the best thing to do is to sit on my hands and protect capital, which I've been doing. But man, I hate not trading. I'm a trader. I'm like a baseball player that's used to being at the uh, top of the batting averages, and everything I get time I get to the plate, I'm either not seeing my pitch or I'm being pitched a ball. While nobody has any idea of when the Middle East situation is going to reach a point where it's considered to be resolved. Obviously, with the midterm elections coming up, there probably is a countdown clock in Trump's mind, though he says there isn't. But at this point, I will remain on the sidelines. I keep trying to enter trades. Last week was 15 of them I tried to enter, and was able to get in one trade, ConocoPhillips, before we sold that. We exited right here. It went up again, and now it's reversing back down. I will continue to be opportunistic and try to enter trades every morning. And if we can get in, great. And if not, then that's okay. We're protecting capital. So hope you have a good day. I'll see you in the boardroom tomorrow.
We gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you'll notice your girl act out of character.